Personal loan or credit card loan? Which decision will save your pocket in times of need? Imagine it is 11 o'clock at night. A sudden medical emergency occurs at home. Immediate admission to the hospital is required, and at the counter you are asked, how will you make the payment? There are still 10 days left for your salary to arrive. There isn't enough money in your savings account. At that moment a message flashes on your phone, instant personal loan approved. On the other phone, the credit card limit is visible. Both paths are right in front of you. On one side is a personal loan, where the EMI is fixed, but you'll have to understand the process and charges. On the other side is a credit card loan, which you can get instantly, but you never know when its cost might become a burden. The fear is that a wrong loan taken in a time of need can continue to eat away at your salary for many months, even after the emergency is over. And the curiosity is, in such a situation, what should a wise person choose, a personal loan or a credit card loan? Taking a loan is not always wrong. Many times, such needs arise in life, where a loan becomes a help. Sudden treatment, urgent home repair, family emergency, education fees or essential travel. In these situations, money is needed immediately. But the problem starts when we take a loan looking only at the need, but not at the terms of the loan. Getting the money might seem easy, but the real story begins with the repayment. While taking a loan, the question shouldn't be how quickly the money will be received, but rather how much of a burden this money will put on my pocket when I pay it back. A personal loan is an unsecured loan. This means that usually you do not need to provide collateral like a house, land or gold for it. The lender decides whether to give you a loan or not by looking at your income, credit score, job stability, repayment history and existing loans. In a personal loan you get a fixed amount and then you repay through EMIs over a fixed tenure. The tenure can usually range from a few months to several years. Its specialty is that the borrower knows in advance how much EMI needs to be paid every month and when the loan will end. A credit card loan is a bit different. It is given against your credit card's available limit. Many times, the bank offers you a pre-approved loan, where many extra documents are not requested. You can convert the loan via an app or net banking, and the amount can be received quickly. In some cases, it is converted into an EMI, and in other cases, it becomes expensive borrowing in the form of a cash withdrawal or card outstanding. That is why a credit card loan sounds easy, but taking it without understanding its cost can be dangerous. If the need is large, such as surgery, major home repair, essential wedding expenses, or covering a large financial gap, then a personal loan often becomes a more structured option. In this, the loan amount can be higher than the credit card limit, the repayment schedule is clear, and the EMI goes separately from the bank account. This makes it easier for the borrower to create a budget, but this doesn't mean that a personal loan is always perfect. Expenses like processing fees, prepayment charges, late payment charges, and insurance add-ons can increase the total cost. Therefore, a decision should not be taken just by looking at the interest rate. A credit card loan can be useful when the amount is small and quick repayment is possible, such as a small emergency expense, a short-term cash gap, or an essential payment that can be repaid over the next few months. If the bank has provided the EMI conversion at a reasonable rate, and you are confident that the EMI will be paid on time, then it can be convenient. But if you keep paying only the minimum due, withdraw cash or roll over the bill, then credit card borrowing can prove to be very expensive. The biggest strength of a credit card is speed, but the biggest danger is also speed, because in a hurry, a person does not read the terms. While comparing both loans, one should first look at the interest rate. The interest rate of a personal loan depends on the borrower's profile. If there is a good credit score, stable income, and a strong repayment history, a better rate can be obtained. On the other hand, the cost on credit card dues or cash advances can be quite high, and interest can often start accruing from the transaction date. In the RBI's common banking guidance, credit card dues are placed under unsecured credit in the personal loan category, which means the regulator also considers it a part of consumer credit, where the borrower should understand the cost. Along with the interest rate, it is important to understand another thing, the difference between the annual percentage and the monthly rate. Many people hear 2 or 3% monthly and think it's normal, but when viewed on an annual basis, the cost can be very high. This is why carrying a credit card outstanding for a long time is considered dangerous. The rate might also appear low in a personal loan, but the real cost is known only after adding the processing fee, GST, documentation charges, and foreclosure terms. Therefore, a borrower must look at not just how much will the EMI be, but how much will the total repayment be. Now comes the matter of the loan amount. In a personal loan, the amount is given according to your income and eligibility. If your salary is fine, your credit score is good, and existing debt is low, the lender can give you a higher amount. In a credit card loan, the amount depends on your available credit limit. If the card limit is 1.50 lakh and 60,000 has already been used, the available limit will be less. This means that in an emergency, a credit card loan will appear instantly, but it may be limited in fulfilling a large need. Repayment discipline is also very important. There is a fixed EMI in a personal loan, so you know that a set amount will go out every month. This is good for those who prefer structure. In a credit card loan, the EMI is added to your monthly card bill. If you are also doing regular shopping, fuel, grocery and online payments from that same card, the bill can become confusing. The EMI is separate, new spending is separate, minimum due is separate, and total outstanding is separate. If discipline is weak, a credit card loan can gradually become a debt trap. The impact on the credit score can also be seen differently. A personal loan appears as a separate loan account in your credit report. If you pay the EMI on time, the repayment history can become strong in the long term, but a missed EMI can damage the score. A credit card loan or high card outstanding can increase your credit utilization ratio. If a large part of the card limit is being used, there can be pressure on the credit score. Therefore, it is easy to think of a credit card as an emergency fund, but it can be difficult to always keep it replenished. In terms of eligibility, a credit card loan is often faster. If you already have an active credit card, the payment history is good, and the bank has given an offer, approval can be instant. In a personal loan too, apps and digital banking have speeded up the process nowadays, but there is still an income proof, KYC, credit check, and sanction process. The RBI has made the Key Fact Statement, or KFS, important for retail and MSME loans, in which the borrower gets the key terms of the loan, annualized cost, and charges in a clear format. Therefore, it is very important to read the KFS before taking a loan. A common mistake happens here. In an emergency, people click on a loan app or card offer to get money quickly, but later find out that a processing fee was deducted, insurance was added, there are foreclosure charges, or the late fee is very high. The word instant in any loan should bring caution, not excitement. An instant loan is only good if the terms are transparent. If the app is not clearly telling you the interest rate, total repayment, due date, processing fee, and penalty, then it is a risk, not a facility. What to do in a medical emergency? If the amount is small and the hospital payment must be made immediately, swiping a credit card can be practical, especially when you can repay the amount in a few days, or if the EMI conversion is being offered at a fair rate. But if the treatment cost is large and repayment will take time, then a personal loan may be better because it provides structured EMIs and a longer tenure. One more thing is important here. If you have health insurance, first check the cashless or reimbursement options. A loan should not be made a replacement for insurance. The same logic applies to a travel emergency. If you have to travel suddenly for family reasons and the amount is limited, a credit card can be useful. But if the travel is a luxury and you have to take an expensive credit card loan for it, it is better to stop. Not everything that feels urgent is an actual emergency. Financial discipline means understanding the difference between a need and a want. A loan should be taken for a need, not for a lifestyle upgrade. In the case of home repair, the amount and urgency should be considered. If the home repair is related to safety, such as wiring, leakage, structural damage, or medical comfort, then a loan may be justified. If the expense is large and the contractor is asking for payment in stages, a personal loan can provide better planning. But if it is a small repair and you can make the card payment in the next billing cycle, a credit card can be convenient. Again, the question is how quickly and how easily the repayment can be made. One advantage of a personal loan is that it gives the borrower mental clarity. One loan, one EMI, one tenure. But the disadvantage is that sometimes the borrower takes a higher amount than needed because the eligibility offered is higher. Suppose the need is for 1 lakh but the bank is giving 3 lakhs. If you have taken the full 3 lakhs, the chance of the remaining money being spent increases. Therefore, while taking a personal loan, take only as much amount as is actually needed. Extra borrowing is an unnecessary burden on your future salary. The advantage of a credit card loan is speed and convenience. But the disadvantage is temptation. The card is in hand, the limit is visible, and the EMI option is available everywhere. Today a phone on EMI, tomorrow an appliance on EMI, and then an emergency loan also on that same card. Gradually, the card bill starts eating up a large part of your salary. This is why a credit card loan is a tool for disciplined people, but can become a trap for impulsive spenders. Now understand the matter of fees. In a personal loan, the processing fee can usually be a small percentage of the loan amount. Some lenders impose charges on prepayment or foreclosure, especially in fixed-rate loans. Under the RBI's recent consumer protection approach for floating-rate personal loans, prepayment penalty restrictions apply in some categories, but the rule is not the same for every loan. Therefore, you must read the loan type and the sanction letter. In a credit card loan, expenses like processing fees, GST, late fees, interest, cash advance fees, and annual charges can vary. These small words can become large bills later. A borrower should perform a simple test. If money is needed immediately, the amount is small, and you can repay it in 30 to 90 days, then the credit card option can be considered. If the amount is large, repayment will take 1 year or more, and you want a fixed EMI, then a personal loan may be more suitable. If your income is uncertain, several EMIs are already running, and credit card outstanding is also high, then it is necessary to stop and make a budget before taking a new loan. Because a loan can solve a problem and can also increase a problem. Another important point is an emergency fund. Both a personal loan and a credit card loan are not substitutes for a real emergency fund. If you have to take a loan for every small emergency, it means the saving system is weak. Keeping aside at least a few months of basic expenses provides financial safety. This reduces the compulsion to take an expensive loan when a sudden expense arises. A loan should always be the last option, not the first habit. In the era of digital personal loan apps, caution is even more necessary. Take a loan only from a regulated bank, NBFC, or trusted platform. Check permissions before installing an app. Avoid apps that ask for access to contacts, gallery, or unnecessary data. Read the loan agreement. The RBI has consistently emphasized transparency and borrower protection in digital lending, so the borrower should also perform verification on their part. Taking a loan from an unsafe app in the greed of getting money quickly can increase privacy and harassment risks. One should be especially careful with credit card cash withdrawals. Many people withdraw cash from an ATM using a credit card, but this is often counted as the most expensive credit facility. You might not get an interest-free period on this, and a cash advance fee may also apply. Unless it is an absolute necessity, withdrawing cash from a credit card should be avoided. Keeping the correct use of the card limited to payments and controlled EMI conversions is safer. Now let's go back to the story. The same man is standing at the hospital counter. He has two options. If the bill is small and the payment will be cleared from his salary in a few days, then the credit card can give him immediate relief. But if the treatment is long, the amount is large, and the repayment requires planning, then a personal loan may be a better path for him. That means the answer is not in one line. The better option is the one that matches your need, amount, cost, and repayment capacity.
If this video has taught you something new, or if you feel this information should reach more people, don't forget to like and share the video. Your small share can become valuable and useful information for someone else. If you have any questions related to this topic, or if you would like to share your opinion with us, be sure to write in the comment box. We read every question and suggestion from you, because your feedback inspires us to create better content. And if you want to keep receiving such interesting and reliable information about business, the economy, and the world in the future, then don't forget to subscribe to our channel GRT Business and also press the bell icon so that you get notifications of every new video directly. At GRT Business, we always strive to provide you with accurate, balanced, and reliable information. Our news and analysis are prepared based on information obtained from various news agencies, public sources, and public opinion. We make every effort to verify and validate each fact as much as possible. But in case of any possible error or dispute, the responsibility lies with the respective sources. Our only aim is to present you with a correct and trustworthy perspective so that you can understand any topic better.